Hi, this is Alessio. Hope you're well. This is going to be a very difficult video for me to make because essentially the market has done something extremely shocking this past few days, especially on Friday. And essentially the market has put me in a very embarrassing situation because I now have to admit that essentially I was wrong. I'll explain to you in a few minutes why I was wrong. And essentially what the stock market did yesterday on Friday is so shocking is that it's now given us a very dangerous signal, a very important but also potentially bad sign for the stock markets. By the way, I'll explain to you in this video what I think this means for Bitcoin as well. So I'll cover Bitcoin briefly later in the video. But I'm going to dig into the chart of the stock market here on the weekly chart and the daily chart and explain to you why what just happened on Friday and just the last few days is potentially a very bad sign, a dangerous sign for the major markets, and yes, potentially even Bitcoin, and probably a bad sign for technology stocks like Tesla as well. All right, guys, this should be quite interesting. Join me. Alright guys, welcome back. Now before I start this video, let me just say something quite important here. If you're new to my videos, if you're watching my videos for the first time, you're probably thinking, oh, here we go. This is one of those clickbait videos all over on YouTube where they just talk about crash and bear market, oh, doomsday and things like that. No guys, that is not the case. If you've been watching my videos for a long time, then you'll know that from the beginning of this year, I've been bullish on the stock market. So certainly I'm not the kind of person who puts out a lot of that, garbage, bearish and crash videos all over on YouTube. On the contrary, actually from the beginning of this year, from January onwards, I've been very bullish on the stock market, calling for a rally and a continued uptrend to higher levels. And the market did rally higher and reached many of our targets. Now, of course, when the markets eventually reached these higher levels back in the summer, I did warn of a potential correction in the market. So that was probably the only time where I got rather bearish in the market. But overall, especially in the last several weeks, I've been bullish on the stock market. In fact, I actually thought the market had potentially reached the bottom here. When it reached this level in October. Having said that, if you watch my member videos, then you'll know I was waiting for confirmation above 4,400 to confirm that we've bottomed. So the confirmation did not actually come. So what's changed? Why am I saying to you all this? The fact is, guys, yesterday, on Friday, the market broke down, not just below the lows of October that you see here, but also broke down below this important trend line, this uptrend line we've had for the last several months, going back all the way to October of last year. We broke this trend line just this past week, as you can see here, with force. And that's potentially a bad sign. I'll come to this in a few minutes. But let's just go to this chart here on the weekly time frame. Now, I want to start the weekly as well, because as you guys know, one of the key levels I look for on the weekly chart is the 21 EMA. And look at this. The 21 EMA was broken by the S&P just back, I think this was August. Now, having said that, the market did try to recover. It tried to go back above the 21 EMA. That's the blue line you see on my chart. So the market, the stock market, the S&P did try to recover and go above the 21 EMA, the blue line, but it failed to do so. It failed to stay above it. In other words, it failed to close above it. And also, as I just mentioned, the market refused to close above the key resistance I had on my chart at 4,400. In other words, the confirmation of a bottom did not come. It never appeared. And in fact, as you can see here, the market instead rolled over, dropped again below the 21 weekly moving average here with a red bar, and closed below the uptrend line. There it is, guys. The market not only failed to get back above the 21 weekly moving average, which would have confirmed the bull market continuation, but actually instead it closed below the 21 weekly moving average and below the uptrend line. In other words, it confirmed and initiated the bear market and downtrend. By the way, that is not all. Because the stock market, the S&P, closed below its October lows, which I did not expect, I did not think that was going to happen. I thought it was a lower probability. But because it did that on Friday, that triggered a bear market as per the rules of the Dow theory. In fact, my good friend and trader Manuel Blythe at dowtheory.com recently mentioned that the bear market has been confirmed as per the rules of the Dow theory. By the way, make sure you go and read Manuel Blythe's newsletter. It's fantastic. So we also have a confirmation of a bear market as per the rules of the Dow theory, which is an extra layer of probability on top of everything else I just mentioned in this video. So guys, because a bear market has now been confirmed in the stock market, this changes everything First of all, it means I was wrong in my bullish expectation for the stock market to reach all-time highs. I no longer think the market is going to reach all-time highs as long as we stay below the October highs at 4,400. Now, I know you're probably thinking, well, hang on a second, Alessio. Only a few days ago, you were saying the fear and greed index was extreme fear. So surely that's a contrarian indicator. That's correct, guys. Usually, in a bull market, fear or extreme fear is a contrarian indicator. The exception is in a bear market. When a bear market gets confirmed, or when a bear market gets triggered like it has done so now, well, that changes everything. That means that we can no longer apply contrarian analysis, because in a bear market, fear begets more fear, and drops turn into bigger drops, and so on and so on. You see, guys, even though I'm sure you've heard this phrase, when everyone is fearful, be greedy, there's an exception to that rule, and that is at the start or in the middle of a bear market, okay? So you can no longer apply contrarian sentiment analysis like fear and greed index in a bear market, especially at the beginning and in the middle of a bear market. So guys, I can no longer use this. This kind of analysis becomes now irrelevant. You see, guys, one important lesson I've learned in my experience is that at the beginning of a bear market or bull market, momentum wins over sentiment. In other words, it doesn't matter how fearful people get, price momentum wins over. By the way, there's something important to mention here. It's about seasonality. Even though we've triggered a bear market in the stock markets, this does not mean the market has to collapse and crash immediately. No, because you see, between October to December, seasonality is usually bullish. Okay, this is what's called a Halloween effect, that usually between the end of October to December, stock market prices tend to go up. However, guys, even if the market has a strong bounce or a rally between now and December because of seasonality, I don't think it will succeed and push us back into a bull market. In other words, guys, I think the next rally or bounce in the stock market between now and December, in the next few months, I think that rally has a much higher probability of failing and pushing us back into a continued bear market. All right, guys? So I'm just mentioning this because even if we see a strong bounce or rally in the next few months, I'm being cautious because I think that next rally will be a bear market rally and it will likely fail. So what that means is if the stock market managed to rally somehow and by some miracle managed to go back above 4,400 resistance, then that would mean that the recent bear market signal was probably a false signal. And that means if the market managed to go back above 4,400, I have to change my mind to become bullish again. However, guys, I don't think that's likely anymore. I think that's a lower probability. Now, as far as Bitcoin and Tesla is concerned, well, let me just mention Tesla first. First of all, because the bear market signal in the stock market is bad news for Tesla as well, especially if Tesla drops below 190. So I'm watching 190. If it drops below 190 and closes below it, that would be a very dangerous and bearish sign potentially for Tesla as well. It hasn't done that just yet, but it's not looking very good for Tesla either. I'll be covering Tesla tomorrow with Charlie Burton. But as far as Tesla is concerned, downside risk has increased for Tesla as well, and I can no longer maintain a long-term bullish expectation for Tesla either. So as far as Bitcoin is concerned, well, this is interesting. Now, the Bitcoin chart is completely different. I'm not going to spend too much time on this in this particular video, but all I'm going to say is this. Because of the bear market signal we have in the major stock markets, that means it's a potentially negative sign. It's a bearish sign for Bitcoin as well. Now, I should caution that Bitcoin at the moment is still above its trend line. As you can see here, Bitcoin has nicely upheld its trend line so far, which is a good sign. So at the moment, I cannot say that the chart of Bitcoin looks bad or bearish. It doesn't. In fact, if you look at it on the weekly chart of Bitcoin, we are still above the 21 weekly moving average here. You can see it very well here. You can see that's the weekly 21 EMA, the blue line. We're above the 21 weekly moving average. It's a good sign. It's a positive sign for Bitcoin. However, because of the breakdown below the trend line and because of the new bear market signal on the stock market, it does mean we have to be very cautious here about what's happening on Bitcoin as well. Because if Bitcoin were to drop below this trend line, and especially if it drops below 26K, and takes out the lows of September here, that would be a dangerous sign. It would be a very bearish sign for Bitcoin as well. Essentially, any move below 26K that goes below the lows of September as well would issue a likely bear market signal for Bitcoin as well. Now, let me just say, this chart still looks positive for Bitcoin. However, it means I can no longer expect Bitcoin to reach all-time highs. You may recall in a recent video I made with Alexandra Overgag, I said it's probable that Bitcoin could reach all-time highs here. But that was only on the condition that the stock market remained in a bull market. That is no longer the case. So because the stock market has now plunged into a bear market, I can no longer have a high probability that Bitcoin is going to reach all-time highs. So that to me is now a lower probability. Not impossible, but just now a lower probability. Having said that though, let me just caution again. Bitcoin at the moment, the chart still looks rather positive. We are still above the uptrend line, as you can see on this weekly chart. Let's go on the daily chart. Yeah, so on the daily chart of Bitcoin, you can see that Bitcoin so far is not showing signs of weakness, it's showing signs of strength. However, my point is that if Bitcoin, let's just push this back a little bit, if Bitcoin were to drop below this trend line, if Bitcoin, so watch this level very carefully, between 26K and 25K approximately here. If Bitcoin were to drop below this trend line and drop below 26K, that would increase downside risk and also increase the probability of it likely moving into a bear market. So watch that key level of support very carefully, because again, if that level breaks, then we'd have to be on high alert for a potential bearish reversal in Bitcoin as well. But for now, the chart of Bitcoin looks rather positive. Again, different from the chart of the stock market. My point simply is that because in the past we've seen a positive correlation between Bitcoin and the stock market, then we have to be very careful here about what Bitcoin may do in the next few weeks. All right, guys, tomorrow on Sunday in the members video, Charlie Burton and I are going to go into the charts of Bitcoin, the stock market, and also gold in much more detail. And we'll discuss the potential wave counts on both Bitcoin and the stock market, as well as the likely targets. So make sure you watch tomorrow's members video for in-depth analysis of the key markets. And if you're not a member, you can join on that link you see right there. Thank you very much, guys. I hope this video has helped. If it has, please give it a thumbs up. I look forward to seeing the next video update. Bye for now.